Have you invested in these stocks? Have you lost money in these stocks? So you had taken a first attempt of investing in stock market and you had found some stocks and invested based on someone else's tips, and you would have thought that you are going to make money in the next 1 year, at least for the next 2 months or a month, so that you can keep continuing investing, right? But the thing is, you had lost money. So if you're someone who had lost money and after your first attempt, then this video is for you. So hi, hello, this is Ganesan, your millionaire coach and author of the book Money Leaks. And today we are going to see the people who had started investing in stock market but lost money just because of choosing the wrong stocks. So we are going to see what are the stocks which had went wrong and how to identify these kind of stocks which is going to go loss. And it's quite difficult. Let's get into it. So some of the strategies people follow to invest in stock market is very simple. One strategy is like if you're someone who knows follows equities and wants to invest in equities, you would have known that equity mutual fund is one of the option where you can find stocks, right? So it's easy to do. So because you can get the conviction that some fund manager has invested in some stocks, and it's easy to choose them and invest. But the thing is, they know when to follow and they know when to quit. And for mutual funds, it's like huge number, so they can invest in huge numbers at a point together, and they can sell it off and exit it together. And when you will get these portfolio, and to remind you, like equity mutual funds declare the portfolio, or actually all the mutual funds declare the portfolio, like where they are investing your money. That is the transparency with respect to mutual funds. But the thing is, all these equity mutual funds declare once in 15 days or once in a month. They issue a booklet saying what is the portfolio and what are the stocks in it, and you can also watch it in all the online websites. So they show only when after 15 days or after a week. So by this time market would have turned a lot, or by this time the stocks would have made profit, or anything can happen in this between. And what this shows is that they have the projection for the next quarter or so. They believe that it is good for the long term. And when it comes to mutual fund, there are different categories like long large cap funds, and the categorization has been clear now. When it is a large cap fund, it is for sure that the mutual fund company can hold it for a period of 1 year or so. But for you, it's difficult, right? So they, even if it is a loss, the fund manager analyze if they can hold it for the next 1 year, they can add stocks, meaning they would have bought some 1 lakh stocks and the stock would have tanked another 20%, and they will have the capacity to buy to add some another 1 lakh stocks or another 2 lakh stocks, because that may be the good opportunity the fund manager believes. But for you, it's your first 1 lakh of investment or first 5 lakhs of investment in a particular company, and if you're losing that amount, you're lost the confidence. So my suggestion to you is, don't follow the mutual fund strategy for investing or choosing the best stock, because it may work at times, but at times it may not work. Unless you understand how the stock market works, this mutual fund strategy and identifying the stock might not work. So again, I'm underlying, like, unless if you understand how these equities work and how should you stagger your investments, unless you understand all these stuff, choosing the mutual fund and choosing the equity stock, that is not going to work. So the next thing is, let's see some of the stocks which are tanked. One stock has tanked more than 99% of your investment. So if your investment is in these kind of stocks, that is why the topic is, have you invested in these stocks, then you would have lost money. It's obvious. So once, let's analyze the companies and the 10 companies, and then if you are identified, then we will see how to identify if this company is going to go go bankrupt, or this company is going to tank, this stock is going to tank. That is the idea we need, right? Let's look at the stocks. And one good stock is, like, I want to say, is DHFL. And this is another strategy which people may follow. Like the biggest investor across the world, the biggest investor is Warren Buffett. And in India, you can follow Rakesh Jhunjhunwala, because he invests in a stock and he exits the stock, and that creates a huge buzz. If he's going and buying a stock in a month, that will be reported in their annual reports, and by that means the stock is going to rise within a month. Because if the biggest investor is putting his money in one stock, it means that he has done his due diligence and the people wants to invest. And if the investor, the biggest investor, is holding a stock for a very long time and that has created wealth, it creates an impression that that is one of the good stock, right? Like that, one good stock was DHFL, which is darling of the masses because it started growing like anything. And Rakesh was investing quite a lot of money, and we don't know how much he has invested initially. But the thing is, he started adding lots of money in those stock, and what happened is that the corporate governance issues started cropping up, and slowly from I think around 300 levels started coming down to 90s, and I think now it's around below 50s. So the stock has tanked like anything, and you would have lost money like anything within a span of year. Till the time the stock was doing good. This stock, DHFL, is Diwan Housing Finance Limited. It is in the space of home financing, and they have been doing good and based out of Mumbai. And another stock related, I will say how it is related, is HDIL, Housing Development Housing Develop HDIL. You can just search it off. So both these stocks are the cousin brothers, and they are from the same family. And one guy was building a construction, and another guy was doing a home financing. And this guy had the PMC bank crisis. Hope you are known this in Maharashtra and Gujarat. This is one of the good regional bank, and this HDIL has bought huge loan from PMC without securities, and that is the reason the PMC bank has gone bankrupt, and RBI started issuing notices, and now something is under control by RBI. So majorly these guys started taking money, and they started spending lavishly in their lifestyle. And it's basically the corporate governance issue. This issue started coming up, and if you're someone who had invested just because these two are good stocks and it tanked in the last 1 year, then you would have lost money. It's difficult to return, make your money to come again, because it's difficult to come back. uh, and to remind you, these are the stocks which is there in the market for the last 10 years. So the 10 years is also not a credibility. If you are invested 10 years before, and if you're waiting, surely in these stocks you would have lost money. And if you're investing in the last 1 year in these stocks, for sure you would have lost money. So this is how these two stocks are fared. Another stock which I can say is Yes Bank. It has created wealth for people in the last 15 years from the time of getting listed, I can say. And the good thing and the bad thing is the CEO is good, and it has created wealth, and it has been sponsoring so many sports activities, and across the market, across India, it has been a very good stock and wealth creator. And even I was just watching the stock, and all of a sudden slowly issues started cropping up, like the CEO is not allowing other people to get in. And slowly there was a carpet bomb, because under the carpet there was a huge bomb. They were been avoiding showing up the non-performing assets. Till that time they showed that all the NPAs are under control, and S Bank is the best bank. So that is how the projections have been going on. Slowly people started sensing something wrong with the accounting and all those stuff, and slowly issues started cropping up. During the last quarter of 2018-19, the issue started coming up, and now the stock has tanked from around 250 to around 30, and now it's trading at around 60s. So market capitalization is gone, and if you had invested in the last 1 year, your money would have gone again. But the probability of getting your money back in this company may be little there. I'm not saying completely gone, but little there. But it will take a lot of time. It's going to take a lot of time. Again, it's a contra approach if you want, but it's a huge risk you're going to take again. If you're having your money again and looking to invest more, it's a huge risk again, because the issue is still not resolved. And Unitech, it's into infrastructure. It has gone right from 2008-9 crisis. I think slowly the it's in the home development, and the stock has been going doing nothing big in the last few years. And CG Power, again a corporate governance issue. And Manpasan Beverage, it just got listed few months back. I mean, I think in the last 1 year it got listed, and again the stock has tanked, just because there has been a huge issue with the way they had handled the issues. And India Bulls Housing Finance, they had started create the company started once it started wanted to create a bank, and they wanted to partner with a existing bank, and RBI didn't approve, and because of all the existing issues with India Bulls Finance, so this stock also started tanking down. Still that time it was raging like anything. So maybe you would have been thinking, should I invest at this moment or should I wait for some time? And Cox and Kings, the world's one of the world's biggest tours and travels, and in India it has been doing extremely good, and all of a sudden it got bankrupt, and everything has gone. Now the stock has tanked 99%. So if you had invested 10,000, you would have lost 99% of your money in S Bank. All you would have left is less than 1,000 rupees in your S Bank. Sorry, in your Cox and Kings Travels. Uh, so what are the major issues which may occur in all these stocks? So these are just tip of the iceberg, 10 stocks which I had chosen. There are so many which cropped up in the last 1 year. I mean, right from ILFS crisis, one after the other, stocks has been coming into issue with one or the other. So what are the things which you can smell it off so that you can avoid continuing your investment or coming out, exiting completely out of the stock market, out of this particular stock, not stock market, completely out of the stock. For example, if you're known about S Bank issue and people start, there is a sense like there is a corporate governance issue. What I said, like CEO is not going and there has been a management issue going on. Though at that time stock was really good and there you may be in sitting in profit. Just at the moment, if there has been an issue like this, you should exit completely. This is my suggestion. So, and there are other good stocks which may be available at reasonable price, or wait for the stocks to perform, or wait till this S Bank issues settle down, then you should have came in. So this is one thing you could have taken a preventive measure. So corporate governance, with respect to corporate governance, this is what people say: if there is a regulatory issue or corporate governance, and if there has been an inquiry going on done by SEBI, so it is a red flag, and you can take a call like, should I keep my investment or should I get out? And I mean, you should have taken the decision the moment you sense there is a red flag, because you are already invested in the share. You should keep updating yourself like what is happening on day-to-day basis or at least on a weekly basis, so that you can take a call. If you're not following all these news, then you may know only when the stock has tanked more than 40%, and by that time you would have lost something at least 20-30%. And then you may try to understand what is happening, and by that time you would have lost another 30-40%. So the best thing to do is keep watching the news the moment you had invested in particular company. Then you will know what is happening, then you will follow the quarterly results. This is the only way. And the next thing is weakening demand. So for example, the stock would have been doing extremely good when the market is good and the timing is good and the globally market is doing extremely well. The moment the demand is falling in the globally, the macro level, automatically it will have the pressure on the local demand also, and automatically the stock will stop doing extremely well or will not do anything. So this is one thing which will happen. For example, Tata Motors, it has got a huge debt just because of Jaguar Land Rover, and just because even in the local market they had lost everything, because Maruti has been gaining shares and there has been other small players, international players which has been coming in and they have been gaining market share. But when it comes to Tata Motors, the new launches has been postponed for a very long time, and that is when they had lost huge market share. So uh, if the demand weakens again, the time they started launching, the market demand has started slowing down and they are not able to pick up the sales. JLR globally, the demand is weakening, and because of all these issues, the stock has been has tanked like anything in the last couple of years. So debt management, again, the debt to equity ratio, if it is more than one, it's again, you should be taking a call. Should I keep my investment in this company, or uh, should I postpone? That is how you should think. If the debt is high, which means that it's a biggest red flag, because they're not able to manage. There are companies who take huge risk when it comes to during the time of slowdown. They will take a huge risk by investing a lots of amount, by borrowing money, and they may not have any demand for their products or services at the time. They will not be able to survive, and that is when the debt will keep on piling, because the interest on the debt will keep on piling, and they will feel the pressure. So that is how some of the stocks will go down. That is how some of the most of the small and medium business owners, they lose their business. So this is again at a red flag. If the debt is huge, and if the look as in India, the market is slowing down, consumption is down. At this time, if you're investing in some stock, just check what is the debt to equity ratio. If the debt to equity ratio is more than one, it's a red flag. Don't invest, because for the next 6 months we may not know what will happen. And at any point of time, don't invest if the debt to equity ratio is more. And all the brand value will not translate into a good stock. There has been a very good stocks for a very long time, and for example, Tata, it is a huge brand, and the trust factor. And whenever we say Tata, it's like they donate most of their money. For every rupee they earn, they spend 66 paisa again to the society, which means that they almost like two-thirds of the money is coming back to the system, coming back to the society. They're giving it back. So and it has always been called as software to salt to software conglomerate, because right from Tata Salt to TCS, they have huge brand, and they have huge companies. They have been in the across the market, from Tata Steel, Tata Motors, Tata Global Beverages, and all these companies. They had overtaken even the foreign companies, and they have been growing like anything. But the thing is, TCS is one of the richest cash cow for Tata as a brand. And when it comes to Tata Teleservices, they had gone busted. They were not able to sustain. And again, Tata Motors, they are finding it difficult. Tata Steel, again, there is a huge debt equity, the debt piling up in that company as well. And there are other companies which is not doing extremely good, or even to a minimum, it's not doing good. So you should take a call. Just because it's a Tata company, if you're investing, it may not do good. So again, the brand value may not translate into the actual stock value. So all these are the, again, let me repeat the 4 points, because these are the points which you can look at if you're investing in a company, and if you're monitoring the report. These are the 4 points. Basically, you can check the fundamental, the basic fund, one of few of the fundamental analysis you can do by yourself, which is very easy to check. So let me repeat again. The first thing is corporate governance. If there is any regulatory issues which the company is not adhering to, and if there is the management issue, if the management is not clear with what is going on, and if there is the clear communication is not there with the people, with the SEBI and with the common people, then it means that there is some issue piling up. So you should take a call. And weakening demand, for example, commodities, and some of the industries like steel industry, commodities, metals, all these are, if the demand, global demand goes down, automatically the stock demand goes down. Infrastructure, if the demand is less, if the government expenditure is less, if the private expenditure is less, infrastructure stocks will not grow. And debt management, again, the debt to equity ratio, it will be available in most of the websites like economictimes.com or valueresearchonline.com. In all these places you can find this ratio. And even trendline.com, trendlyne.com. So all these websites, you can see this debt to equity ratio. If it is more than one, take a call, look at analyze the company. Is it good to invest based on, even after this? Or else it's better to just have a look at those stocks, watch it, monitor it, and then you can find another stock, right? So you don't need to put your money in the company where the debt is huge. And the next thing is, the brand value will not get translated into the company in the good stock. So if the brand value is good, don't go by that. You may find so many brands, because for the brand, people are investing their money like anything, they are spending their money like anything. That is a marketing thing. But the thing is it getting translated into a good stock? So for that, you need to check the above 3 points: corporate governance, debt to equity ratio, weakening demand. During the weakening, the economic cycle, the stock would have gone through so many cycles, still it is good, still it has created value for itself. So that is how you should check if the brand value is getting translated into a good stock. So all these are points which you can monitor, which you can check if before investing in a company. Even after you are invested, if you want to monitor, if you want to think, if you're thinking like, should I sell my stock right now, the market is already at peak, should I take my money out, or should I invest, I lost the opportunity already? Check these points, and still if the stock is good, then you can go and invest. Because we are not investing for the next 1 month, you're not investing for the next 6 months. It's for the long term. Because if you are a, I have been already recommending, like, you should be a investor for a long term, so that you create wealth. If you're looking at a trading option, then you should be very cautious. We never know how the market is going to perform. So for an investor, just check these 4 points and see whether if you're already an investor, check whether the stock is going through all these funnels. It should come out. If it is getting stuck in between, if the debt to equity ratio is more, then you should think about, should you continue your investment in this stock, or should you take your money out? So that's it from me. If you have any doubts with respect to the stock which you're already invested, and analyze these stocks, and let me know if you need any further help in these stocks. Again, this is not a stock recommendation. I'm just pulling the data from the last 1 year, like how these stocks had performed. And if you had invested, you would have lost money, and instead of continuing your investment in all these stocks, it's better to sell it off at whatever price available, and put your money in very good stock for the long term. So thanks for watching, and you have a opportunity to be part of my close group, where we will be sharing more insights on stock market. And I'm going to it's very special and it will be available only in this closed group. If you're interested to create wealth in stock market and if you want to learn more about stock market, be part of my closed group community. And we are going to launch some interesting things in the towards a month, and it's already month end, and in the first week of December it's getting delayed, but it's for the good. I'm sharing all the needed information for people to invest in stock market and putting it in a common place. So that is when it's easy for people to digest and take steps. So if you want to be part of my closed group, just click the below link and just answer the 3 questions so that I will allow you approve you in my closed group. So thanks for watching. Please share this video with your friends who has been so much cribbing about investing in stock market and losing their money, so that they also can create wealth and be happy, just like whatever you see in the back of me. So thanks for watching. Please share this video with your friends. Share more with your friends if you had liked this video. And any feedback, just put your comments below. I will be happy to answer your questions.